Hello, I'm Ron Wilson. In this month's news, the government approved a royal commission into misconduct in the banking, superannuation and financial services sector. The Superannuation Housing Affordability Bill was passed, opening up superannuation to pay for housing. ASIC released multiple regulatory guidance updates covering AFS licensees, the definition of independence, conflicted remuneration and the Financial Services Credit Panel. APRA reissued warnings of heightened risk in housing lending, stating that the sector will be a major area of focus for it in 2018. Dan Purves has the details.
The government has approved a royal commission into misconduct in the banking, superannuation and financial services sector at an estimated cost of $75 million. The royal commission will run for 12 months, with the final report expected in February 2019. The draft terms of reference forbid the Commission from making recommendations in relation to macro-prudential policy, regulation or oversight. It is also not allowed to prejudice, compromise or duplicate any ongoing or past inquiry or investigation. Within these confines, it will inquire into a broad range of matters including the nature, extent and effect of misconduct by a financial services entity, any conduct, practices, behaviour or business activity by a financial services entity that falls below community standards and expectations, and the use by a financial services entity of superannuation members' retirement savings for any purpose that does not meet community standards and expectations or is otherwise not in the best interest of members. Former High Court Judge Kenneth Hayne has been appointed to lead the inquiry. Legislation passed in mid-December allows non-concessional superannuation savings to be used as a deposit by first home buyers, and older Australians to put proceeds from the sale of their home into superannuation. Under the First Home Super Saver scheme, individuals can put $15,000 a year into tax-efficient deposits. Up to a maximum balance of $30,000, eligible couples can combine savings, increasing the maximum contribution to $60,000. At the other end of society, Australians aged 65 and over will be able to put $300,000 from the sale of their house into their superannuation account, over and above existing contribution restrictions. Couples can take advantage of the measure, together contributing up to $600,000 into superannuation. To be eligible, a person needs to have owned the house for 10 years or more. In other superannuation news, responsibility for the early release of superannuation benefits on compassionate grounds is to be transferred from the Department of Human Services to the ATO. This transfer is expected to take effect in 2018. In addition, Treasury will review current rules governing the early release of superannuation for compassionate grounds and severe financial hardship. It will also review whether, and the circumstances under which, superannuation assets should be available to pay compensation or restitution to victims of crime. ASIC has released multiple regulatory guidance updates covering AFS licensees, the definition of independence, statements of advice, conflicted remuneration, and the Financial Services Credit Panel. The regulator has restricted the use of terminology that implies independence in financial services following its announcement in June 2017. A financial services provider needs to meet numerous conditions to be able to use the terminology, including not receiving commissions, volume-based payments, or other gifts or benefits. In its guidance on SOAs, the regulator says it considered that the presentation requirements, namely the structure, layout and language, was as important as the content requirements. The life insurance remuneration reforms commenced on 1 January 2018 and change how remuneration arrangements work in some life insurance distribution channels, such as direct sales. This includes the removal of exclusions for benefits paid in relation to life insurance products. Finally, ASIC has set out the principles and processes for the newly created Financial Services and Credit Panel. There are 7 principles to the administrative hearing: the opportunity to be heard, the entitlement to a notice, the right to an impartial decision maker, findings of facts are to be made on sound basis, there is no onus of proof, court practice does not apply, and applying policy and precedents. APRA has reissued warnings of heightened risk in housing lending, stating that the sector will be a major area of focus for it in 2018. The combination of high, rising household indebtedness, record low interest rates, and an erosion of lending practices from institutions has APRA concerned. APRA Chair Wayne Byers said borrowers with a low net income surplus are vulnerable to shocks. The RBA kept the cash rate at 1.5%. The board was pleased to see positive business conditions and an increase in capacity utilisation in Australia. Non-mining investment was up, with forward-looking indicators being more positive than they'd been for some time. Increased public infrastructure investment was also a positive sign. The bank's central forecast is for GDP growth of 3% over the next 3 years and for inflation to pick up gradually as the economy strengthens. Currently, inflation remains low, with both CPI and underlying inflation below 2%. The Australian economy grew by 0.6% in the September quarter, latest ABS figures showed. Compared to the September quarter 2016, GDP grew by 2.8% in seasonally adjusted chain volume terms. Professional, scientific and technical services, healthcare and social assistance, and manufacturing were the major drivers of growth for the quarter. Only 3 of the 20 industries tracked by the ABS did not show positive growth. These 3 were agriculture, forestry and fishing, information, media and telecommunication, and rental, hiring and real estate services.